Advice for first-time homebuyers. If you're a first-time homebuyer, this video is for you. There are a lot of opinions and fears swirling around out there in the media about the housing market and if this is or isn't a good time to buy a house. As a first-time homebuyer entering the market, there is an overload of information coming at you and for you in every single direction. And gosh, I know it can be totally overwhelming at times. Today, we're going to break it down for you and share some of the most important advice for first-time homebuyers. Whether you're looking at buying a home as soon as possible, or maybe in the next few months, or maybe even in a year or two, these tips will be helpful as you begin navigating the home buying process. Now realize there is still competition in this real estate market, which is why it's really important to work with an experienced home lending team. Why does it matter though? You might ask yourself that. Well, here's why. First, you want to work with a lending team that wants to educate you. You're new to this process, and like anything new in life, you're going to be nervous. But once you gain more information and knowledge about the process and the expectations and how it all works, that's going to calm your fears and make it for a better process and experience for you. An experienced lender is going to provide financing strategies to make sure you're in the right loan and tell you what your options are and why they differ, the pros and cons of each. There is no perfect home loan out there, but based on your particular scenario, there's going to be a best home loan for you, but you have to understand why it's the best, and a great lender will be able to help you with that. All right, so here's a few tips for first-time homebuyers. 1, be prepared with a fully underwritten loan pre-approval. What is a fully underwritten loan pre-approval and why is this important? So here's the inside track. You may not know this, but most lenders actually do not submit your home loan pre-qualification into a human underwriter until after you're already under contract. Well, we do this completely different here because we believe that giving you the confidence that your home loan has already been underwritten, that means approved, subject to you finding the property and the property specifications and other things, but the actual credit and income and asset part of your home loan gets approved. We do that up front, and most lenders don't. So when working with a lender, you're going to want to push to have that loan pre-underwritten up front at the pre-qualification stage, and that will take you from what we call a pre-qualified loan into a pre-approved loan. And again, this is done by the human underwriter, not by the automated underwriting system. And most lenders will say, oh yeah, your loan is approved. Well, when they say that, unless they say by the human underwriter, that just means that they sent your loan through the automated underwriting system, and that approval is only as good as the information that was submitted through that system. And this is why sometimes you will hear of horror stories where people are days or maybe a week outside of the close of escrow on their dream home and then their loan is denied. We want to avoid that. And the way you avoid that is to work with a lender that can have your loan pre-underwritten up front before you ever even start shopping for a house. Now, depending on the market, when you're making an offer, if you want to ask the seller to contribute towards your closing costs, it's okay to do that. Work with your lender and they will tell you what's going on in that particular market, how much competition is on that house, whether they think that you can actually negotiate seller concessions. This essentially means a seller credit towards your closing costs. Now, as interest rates have gone up over the last couple of months, it's important to know that there are some really cool financing strategies out there where the seller can contribute towards your closing costs to help you buy down that interest rate. Yes, buy down that interest rate, which will essentially help to make this home loan more affordable to you. Sellers can contribute towards your closing cost, just not your down payment. There's so many different zizzles and zazzles out there about down payment. The loan type is going to dictate the down payment. It's good to know that there are low down payment options available. Now, not every lender offers some of these options. So again, working with a lender that can give you the best scenario for your needs is the key. Now, there are first-time homebuyer programs out there, depending on the county or the state that you live in. Some of them have down payment assistance programs. Again, pros and cons to that. Going back to, you need to have somebody that can understand your particular scenario, what your financing goals are, what your particular financial situation is, and then be able to guide you through it. That is such an important part of this process. An experienced lender will also contact the listing agent on your behalf when your offer is submitted. Now, this helps when you are in maybe a multiple offer scenario, and that simply just means that maybe there's other people interested in that same house. So if your lender contacts the listing agent proactively and lets them know that your loan is already pre-underwritten, meaning by the actual human underwriter, and all they need is that purchase contract, an appraisal if one's required, and the title report, assuming nothing else changes in your world like loss of job. But outside of that, the lender's contacting that listing agent, being proactive, and letting them know that you're ready to go. Trust me, this makes a really big difference when there's a lot of different buyers on the table. Do's and don'ts. Once you're pre-approved, we've got a great worksheet that will walk you through the do's and don'ts. Here's things you can do during this time before you get your keys in hand, and here's things not to do during this time. One of the most popular things, especially for first-time home buyers that might need a washer and a dryer, if this is you, listen up. You get down to the close of escrow. Your house hasn't closed yet, which means you don't have keys in hand. You don't own it yet. And Home Depot's running a big sale on those washer and dryer. And you go to Home Depot and they give you a no interest loan. Guess what? It's still a loan. It's still a debt. The lender still has to do something with that information. The lender's going to monitor your credit. They're going to see that credit inquiry pop up, and that alone could put you in a position to not be able to qualify for the home loan or delay your closing, which neither one of those are a good scenario. So remember that once that lender pulls your credit, that credit profile and that credit score is what's driving your home loan approval. And that means anything that's going on with your credit profile before you get your keys can impact your home loan approval. And so I always coach our first-time home buyers to think, don't have any credit inquiries, meaning don't go out and obtain new credit. Try to keep your balances on whatever your credit cards were at the time that the lender pulled your credit at that or a lower amount, meaning don't go out and buy a really big purchase because it could impact that home loan pre-approval. So credit is key. Also realize that that credit report is only good for a period of time. Generally think anywhere between 90 days and 120 days from the date it was pulled. So that means that if you haven't closed on your home during that time frame and the lender has to re-pull your credit, maybe your debts have changed, maybe your credit score has changed, maybe there's something negative that's popped up that could impact your ability to qualify. So credit is by far one of the most important things to consider and protect and have awareness around as you move through the home loan process. Secondly, change of jobs. This is a big one because if you are talking about or thinking about changing jobs, the job scenario that the lender used to actually pre-approve your home loan, if your job changes, then your home loan pre-approval could change just depending on the change of jobs. So anything that is going to have variable hours or a change in income, or maybe it's not in the same line of work, or maybe you're a W-2 type of employee and that was what was used when you did your pre-approval, but maybe you end up taking a contract type of job, which means that now you're a 1099 type of employee. That is a big deal. So before you make any changes with your job after you've been pre-approved, be sure to talk to your lender first. There you have it. Now you have some important advice for first-time home buyers and a few tips that may help you form a strategy as a first-time buyer in this real estate market. It's always best to reach out to your lender and talk with them, have an open dialogue about your hopes, your dreams, your concerns. They're going to work with you to create a strategy that best fits your financial scenario. I hope you found value in today's video. If you did, please give this video a thumbs up. I truly have a passion for home loan education. I know it's kind of crazy, but I do. And I want to help you make an informed buying decision. Be sure to share this video with other first-time home buyers who would find value and find this helpful. And please remember to subscribe. Thank you so much for watching. Until next time.